Welcome. Thanks for joining IBS for your CAIIB program. My name is PTS Murthy. I retired from Bank of India, and for the last 25 years, I have been taking are associated with JAIIB and CAIIB programs. Okay. So now I'll be covering this BRBL module A and B as per the present schedule. So let's see how the program goes through. Importantly, remember, when I am going through the presentation, in case you have any questions to ask me the question. Unmute your phone and ask me the question. I will reply it. Sometimes if you are not able to ask me then and there, if you have any doubt on the subject, kindly put it in the WhatsApp group also. I will reply there. So the communication should be continued so that once you cover the entire subject, there should not be any doubts in your mind about the subject. This is one. Second is, during the presentation, kindly keep your phones under mute. That's point 2. Third, very important is, once the class is over, try to revise yourself what you have learned. That's very important. Because in CAIIB, there are 5 papers and all 5 are different subjects, which we will not be dealing directly on day-to-day basis. Maybe if it's a credit subject or principles of banking, we may be dealing in branches also on day-to-day basis. But if you look at other topics like HR or compliance, or you talk about the risk management, balance sheet management, all those things, we don't deal in, with these subjects on day-to-day basis in the branches. They will always be new to us. So therefore, there we have to pay more time, more attention in understanding the subject. Okay. So if you follow these guidelines, possibly you will be able to successfully come out of this CAIIB examination. And particularly this paper, BRBL paper, paper 4, is very easy paper and highly scoring paper. When you compare to other 3 papers or 4 papers for that matter, this is a highly scoring subject. Normally in CAIIB examinations, we have numericals and we have statement questions and we have direct questions. In this particular module, this particular paper, paper 4, you mostly have only direct questions. At least 60 to 70% will be direct questions. Maybe for 30 to 35% will be statement questions, and maybe 5% or even 3% could be only numerical. So if you understand the subject better, your chances of scoring high will also be good. Okay. In the previous examinations, many of the participants who attended this program have successfully scored very high marks in this particular paper. And I hope that will also happen with all of you. Good. So be communicative. Don't hesitate to ask me questions and get your doubts clarified. I'll take the subject thoroughly from point to point, and after the module is over, I will share the presentation so that at one place you can have entire presentation at one point. Normally people will ask me, sir, day to day you share me. That doesn't help you much. Other than increasing my workload, it doesn't help you much. One module we normally complete in 4 to 5 days. After 4 or 5 days, I'll send the entire presentation to you. In case something is interesting for you and you wanted to have it, I can also send it. There's no big issue in that. Okay, these are all things which I wanted to inform you before we start the session. So hope everybody will enjoy the sessions, be interactive. I make them as simple as possible. Regulations and compliance is the first one. Paper 4, module A. In this particular module A, we have 7 units, unit 1 to unit 7. And we will start with the unit number 1. Normally, when we are talking about the banking laws or when we are talking about the laws in general, the country's laws can be classified into 4 categories. One is general laws. Second is commercial laws, or sometimes they call it as also mercantile laws. Third one is called industrial laws, and fourth one is called criminal laws. This is how the the normal classification we have of various acts passed by the Government of India in our country. During this particular module, we will be mostly looking at the general laws and commercial laws. General laws in particular, Banking Regulation Act, Reserve Bank of India Act, and such kind Negotiable Instrument Act, these kind of things. In Commercial Act, we talk about the Indian Contract Act, Sale of Goods Act, Transfer of Property Act, such kind of things. Fortunately, I don't touch anything for you either on industrial law side or on criminal acts side. So these are the important things which we will be covering. Very simple one we will be covering. You need then this particular module A mostly concentrates on Banking Regulation Act. Okay. So, and when dealing with the Banking Regulation Act, it goes subject wise. It does not straight go by section to section wise. It goes by subject wise. Means about, for example, capital requirements of a bank. It will be covered in some chapters. Then we have the board of directors of a bank, covers in certain chapters. Like that, chapter wise it goes. It doesn't go section to section wise. Means section 1, section 2, section 3. It doesn't cover like that. So there should not be any confusion when we move. First, I may be covering section 40 for you. Thereafter, next slide may be section 12 also. Because it is not section to section. It is subject to subject or chapter to chapter. Okay. First we start with what is this Banking Regulation Act 1949. This is how we speak about that. The Act came in 1949. Major amendment took place in 1966, especially in 1966. Why the major amendment took place in 1966? Because in 1965, the cooperative sector banks, especially rural cooperative sector banks, there are two rural cooperative sector banks. One is called state cooperative banks and second is called district central cooperative banks. These two were brought under the regulations of BR Act. So major amendment took place in this 1965. In the BR Act itself, they have added a new section, section 56, and that is chapter 5. Chapter 5, section 56 excludes, it deals with the cooperative banks, especially rural cooperative banks. Urban cooperative banks normally come along with the regular act. There is no separate thing for them as it is there for cooperative banks. So some next amendment took place in 2017. Then two sections were introduced, 35AA and 35AB. After the passing of IBC code, Insolvency Bankruptcy Code, maybe in one of the modules we have more details about this IBC code. When the IBC code was introduced, banks, when they were required to recover the funds from the corporate borrowers or where are the entities eligible for taking action against them under IBC, so banks should have those powers to do so. So then section 35AA and AB were introduced, inserted to authorize RBI to give such kind of guidelines. Another major development took place in 2020. This amendment of 2020, you can simply call it the latest amendment for some major things, where we can speak about the Reserve Bank of India's recontrol on the cooperative sector. When I said recontrol, after 1965 Act has been passed, the amendment has been passed, Reserve Bank of India has delegated their powers of supervision to NABARD for cooperative sector, especially rural cooperative sector. But subsequently what happened, over a period of time, RBI found out that the supervisory control or the monitoring by NABARD is not just sufficient enough to control these organizations, because they have been growing up wildly and a lot of business is being done by them. Therefore, in 2020, this amendment gave superpowers to RBI again, once again, to control the entire cooperative banks, point one, and also the cooperative banks have been permitted to raise capital through the public. So these two things are more importantly covered in 2020 amendment. At that point, in some other slide, I will cover more about that. Another amendment came in 2025. Not much of changes were brought in. except for some changes in nomination guidelines, where so the two types of nominations have been introduced. Nominees have been made into four, so some guidelines have come therein, and some changes have come in SLR requirements. So these are all the various changes that have taken place in the Banking Regulation Act since it was enacted in 1949. 1949 is the act, some amendment in 66, some amendment in 2017, some amendment in 2020, another amendment in 2025. Kindly remember that this act is not applicable to PACs. These primary agricultural credit societies. In rural cooperative sector, we have three types of banking structure. One is a rural state cooperative banks. Every state will have a state cooperative bank. Like Andhra Pradesh has AP State Cooperative Bank, Telangana has the Telangana State Cooperative Bank, Maharashtra has Maharashtra State Cooperative Bank. Like that, each state will have one state cooperative bank. That is a rural structure. Another is district central cooperative banks. Almost in each district, almost, they will have a branch, and that district central cooperative bank will be operating within the district. So third one is PACs, primary agricultural credit societies. They, in addition to doing the business of banking, they will also be doing some other activities which are relevant to the agricultural sector, like trading, distribution of fertilizers, etc. They will be doing. So these three. Then we have land mortgage banks, then long-term finance banks. Like that, we have different set of banks. So those banks are all doing the business of banking also, but the Banking Regulation Act only covers the state cooperative banks and district central cooperative banks from rural sector. Other than that, the other banking sector, if we can really look at that, we can classify them into three more categories. One is the commercial banks, like public sector banks, the private sector banks, foreign banks, and regional rural banks. These four banks are called commercial banks. Then we have urban cooperative banks. In urban cooperative banks are also the individual urban cooperative banks, multi-state urban cooperative banks. They are also covered under BR Act. Rural sector I already covered you. Then we have specialized banks or differentiated banks, they also call it. The small finance banks and payment banks. They are also covered under BR Act. In addition to this structure, we have some more names coming up for our regular hearing. That is development banks like NABARD, SIDBI, IFCI, NHB, NABBID. These are called development banks. Exim Bank. They are not covered under the BR Act. They are constituted by different statutes by Government of India, and they are fully controlled by central government. RBI does not have any control over those kind of development banks. This entire is the structure of the banking in our country. Moving forward, we will be concentrating on various sections of Banking Regulation Act, which covers all these banks, entities. Normally they are called REs, regulated entities. Regulated entities means commercial banks, cooperative banks, differentiated banks. So how they are covered, what type of businesses they are permitted to be doing, how they got those powers are what we are going to discuss in these various sections. First section and very important section for is section 5B, which speaks about the business of banking. Normally people are confused, even customers are also not aware what a business is done by a bank. Because normally in the market, you go to a kirana shop, you say what business you are doing. If he says I am doing kirana business, any person will understand what he will be dealing with. You go to a medical shop, you ask him what business you are doing. Medical means you will understand what type of business he is doing. And like that, everywhere you have that specific purposes you will be knowing by just listening to the work they are doing. But in banking, it's not like that. What business you are doing in banking is really a confusion even to us who are working in the bank. Section 5B defined what business, what do we mean by business of banking. There is a definition. This definition is very, very interesting definition. Not a casual read will go with this. Let us look at this definition. As we know, the very purpose of banking is accepting deposits. Means if anybody wanted to do business of banking, first they have to accept the deposits. From whom they have to accept the deposit? They have to accept the deposit from the public. These are all relevant terms which we use in the discussion in various sections also. So, if I am going to set up a bank, first of all, if I wanted to do the business of banking, I need not have any capital. What I should have to do the business of banking? I wanted the deposits from the public. Once I take those deposits from the public, what I should do with that money? I should do that with that money. Either should use that money either for lending activities or I should use it for investment activities. Investment activities means investment of funds. So the deposits is one concept, lending and investment is another concept. This will create the balance sheet of a bank. Liabilities are created first in the form of deposits and assets are created out of these liabilities. And there are two types of assets. One is the advances, second is investments. Okay. Then the other things will also add up. You will have more discussion about all these things in your another module. So these are the two. Then another thing the Act says is that it also protects the customers. It says that whatever deposit we are accepting for a customer, it should be repayable on demand. So that is the reason why even a customer makes a term deposit for a period of 5 years or 10 years with us. After 1 year or 2 years, if he comes to us and says, give back my money, you cannot stop him not making the payment. You have to give him the payment because the Act itself gives that privilege to the customer. I use the word customer, but customer is totally a different word. So to the public, we have to pay back the demand. So here arises the concept of liquidity for the problem, liquidity problem for the bank. So this is another point. Now how a customer should demand, that's another point also we have to discuss. Can he come to the branch, stand at the gate and say give me payment? Or can he come to manager's house at night 8 o'clock and ask him to make the payment? So because simply it says repayable on demand. So but says no. It gives also protection to the bankers. It says whenever he is demanding money, it is always withdrawable by check, draft or otherwise. It says that. So when the customer is demanding money, you should always demand money by one of these instruments. Now these instruments give us protection. What type of protection they give? These instruments, check, draft or otherwise means normally a letter, is covered under Negotiable Instrument Act. Negotiable Instrument Act says whenever payment is requested by a customer, how a payment should be made to the customer. It says it has to be presented during the branch hours or business hours of the branch and at the place of business, and 2, 3 where the customer is holding the account. So this kind of this particular line gives us a very important concept of learning about the Negotiable Instrument Act. This is the business what you call the definition of business of banking. This is one. Now here RBI came into play. He says the banking business says accept the deposits from the public. Then RBI comes here and says, now in the entire presentation you will find there are two types of guidelines I will always be discussing with you. One will be the sections of BR Act. Then second is how the Reserve Bank of India has given guidelines, the operative guidelines to the banks depending upon the Act guidelines of the BR Act. Both things I have to discuss together to understand this subject. Now here it says the Act says accept deposits from the public. Then here RBI comes and says no, you cannot accept deposits from the public as much as you like. Again you have to comply with the KYC guidelines. Unless you comply with the KYC guidelines, you cannot accept deposits from the public. This is one point they said. Next, section 49 of the Banking Regulation Act also says that. Okay. So when you are demanding money, it's only deposits are always withdrawable by check. Okay, only the entities which are entitled to do the business of banking under section 5b are only permitted to allow their customers to draw cash only through checks. No other entity like non-banking financial companies, they will also be doing similar type of business, banking business they will also be doing. PACs, for example, I told you, they are also doing such kind of businesses. They are all not permitted to allow their customers to draw their payments through checks. Only the entity which has been permitted to do the business of banking, the business of banking as per section 5b, are only allowed to issue checks to their customers to draw the money, and that is under section 49A. You have to remember all the sections what I am discussing with you. They are asking in the examination these sections also. Next one. Whenever an entity he wanted to do the business of banking, they again have to take permission from Reserve Bank of India or a license from RBI, and there's section 22. Okay, these three. Section 5, business of banking. Section 49, deposits to be withdrawn by check. Section 22, to obtain license from RBI. What are the guidelines for RBI? Section 22 we'll discuss separately. Another important the section in BR Act is section 7, which speaks about that any bank, if it has been permitted under section 22 of BR Act to do the business of banking as stipulated under section 5b, need to have the word bank in its title. So that's why you see Central Bank of India, State Bank of India, Axis Bank, ICICI Bank. You look at any title of the bank, you will find that word bank. So it does not mean that if any entities name the title bank is in the word bank is there, they are doing the business of banking. For example, in Hyderabad, I have Chiranjeevi Blood Bank. It does not mean they are doing the business of banking because the word bank is there. But if they are doing the business of banking, they must compulsorily have the word bank. Okay. So these are also important sections in this particular slide. 5b, 49, 22 and 7. Now, normally when the customer says, sir, what business you are doing? I'll say section 5b, this is a business. Then customer will ask you a question. Sir, you are also giving lockers to us. Are you not doing this business? Then where it is covered under section 5b? He may also ask you, sir, you are sending third party insurance. Then where is covered in this particular section? Some questions may also arise. Further taken, those banks which have obtained permission from RBI are also permitted to do additional businesses. That is section 6. In section 6, it permits the banks to do additional businesses like the remittances, safe deposit lockers, safe custody services, third party products like insurance, and the mutual funds, foreign exchange business, bullion business, all those kind of businesses are also permitted to be conducted by the banks in India under section 6. Now, since you are at the CAIIB level, I will tell you some interesting thing here. Whenever we are doing the business, either the business of banking or businesses under section 6, we always get income. Okay, this is only for the purpose of income. Now, or there could be some expenditure also. Whatever businesses we are doing from the banking side, means deposits and advances and investments, that income is always booked to interest income. Okay, section 13 of the profit and loss account of the bank, interest income. Any expenditure towards payment of interest for the customers is dealt under section 15. So section 13 talks about the interest income, which is out of section 5b, and the schedule number 15 speaks about other income, which is coming out of section 6 of this particular section. There are again section 14, section 16, they deal with different kind of things. So this is another web. So if somebody asks you, what is the main business of banking? It is section 5b only. Section 6 is only ancillary business. Another important point we need to understand about section 6 is that if a bank wanted to do this section 6 business, means whatever the various businesses that have been stipulated under section 6. They can also set up a subsidiary and do the business also. But as far as section 5B businesses are concerned, they are not permitted to set up any subsidiary. They can only set up branches within the permission given by Reserve Bank of India and do the business. But section 6 businesses, whatever have been shown here, they can also be conducted by setting up a subsidiary by the bank for doing this kind of section 6 businesses. So these are all the various permitted businesses which are allowed under this section. I'm not talking about each one separately. If you once go through them, they are self-explanatory. In case any questions also come, you can also ask me subsequently. Okay, this one. Secondly, there are two sections again. Section 8, which speaks about the prohibited businesses, which businesses banking cannot do. So normally when we say banking business means is a financial business, means financial activities we will be conducting. In addition to financial businesses, we will also be dealing with some commercial activities, properties, stocks, okay, all those things also we will be dealing with. So there they has prohibited, even when you are dealing with other than financial activities, what businesses you cannot do, like trading. You cannot be partly doing a trading activity. Since there is a good space in our branch, we cannot run a kirana shop there, or we cannot run a medical shop there, because that kind of trading activities have been strictly prohibited. Second is buying or selling or bartering of goods. Okay, because we are dealing with financial instruments, financial products, these are all prohibited. Okay, then goods means here they speak about that. They say buying and selling of goods cannot be done. But goods means they say movable property. But banks can deal with stocks, shares. Stocks means the financial instruments. Shares, money and bullion and spicy. Spicy means activities relevant to the bullion. Gold, silver, etc. We can deal with that. But we cannot directly deal with the physical goods. So this is what prohibition with reference to section 8. Another is section 9, which speaks about banks buying property, immovable property for themselves. Okay, so we say, so if whenever the bank is buying property, it is only for its own personal use. So let's suppose a bank wanted to buy a office space for setting up of a branch, or maybe their regional office or controlling office. They can buy the property, there are no questions asked there. But sometimes what will happen, if bank has acquired any property, okay, in which cases banks will acquire properties, in SARFAESI Act, banks are permitted to bid for the sold properties. When the bank is bidding in SARFAESI Act, they will buy some property also. If they are purchasing some property like that, okay, maybe because of different circumstances, if they are not using that property for their own purposes, they should dispose it off within a period of 7 years. For example, see, Central Bank of India purchased a property in SARFAESI action, a commercial property. So within 7 years from their acquiring it, they should dispose it off. Otherwise, with RBI permission, they can hold up to another 5 years. So means under section 9, if a bank is acquiring property for the purpose of their own offices, then they can hold it. Otherwise, they cannot hold it beyond 7 years. Okay. Somebody is asking what is spicy. Spicy means which is relevant to the bullion business. Bullion means gold, silver, platinum, etc. What are the things that we speak about to the word spicy. Other things equivalent to bullion. That's a word. Other things equivalent to bullion. Okay. So these are the things about the prohibited businesses which cannot be conducted by the banks. So these are all the introductory chapters with reference to the Banking Regulation Act. Section 5B, then Section 5B, Section 49, Section 22, Section 7, Section 6. So these are all things what we have discussed. Okay.